higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Let's go into the charts once again, shall we? Bada bing, bada boom. So we put out the idea of this rejection here about 12 hours ago for the Asian session. So we're doing another stream because we made up for the one we didn't do last night. So yeah, we never made it up to the 786 region. It looks like we could be possibly rejecting here. We did get a little slight bounce off of this daily support, and if this doesn't hold on the bearish trend-based fib extension level, we could be coming lower. How do I get the bearish trend-based extension level? Well, here is just the regular retrace. For your bearish trend-based fib extension tools, you go to your trend-based tools over here on the margin and your favorite trend-based fib extension. It requires 3 clicks instead of 2. The first is your impulse to the downside or the upside, doesn't matter. And the retrace is the 3rd click. And that sets your math into motion, and that tells you where you could be continuing. And so this impulse to the downside and retrace to the upside can give you some math if you click properly. And so you click from that retrace to the downside on the daily, and that impulse rather to the downside to the daily, and the impulse to the upside. Actually, the impulse started here, so we might be conservative in our math by moving it to here. Yes, so we'll go back to that one. and yes, use that math there. So that puts us right where we're at now at 29,232 as a level to break on the 236. If we break beneath this level, then possibilities of coming down into these regions at the take profit zones here on the 1 and 1,382 level, which would also knock out this buy side liquidity of all these days before expecting long to occur. So that's where you would look for that bullish divergence for the upside play to 31K in my humble opinion. So this could be a fake out to the upside for a liquidity grab to the downside, much similar fashion to what happened here where they knocked out the buy side liquidity over here on these guys before taking it to the upside. So what is liquidity? Well, we go into the high block to look at that heat map, and that's when people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And seeing who gets crispy in the charts today, let's go ahead and take a look. Also consider subscribing, since this does cost $70 a month for this analysis, and we share it to you free of charge. So if you hit that like button and subscribe, that's free value right off the bat you get every day. So here you see there's 10 billion in imbalance to the short liquidity, the long imbalance rather. So they just went back down into this long liquidity that we suggested 12 hours ago, and they ate up some of these guys. This $152 million character we went over this morning is now wiped off the table, wiped clean, repossessed, taken money, blown accounts, Sato and all that.
Fatality.
And they another world's tiniest violin is played. So as we see here in this drop to the downside, there was 117 pool that was opened in short liquidity at this bottom here, so we could be retracing back in to take out this 100x pool of 117 million that shorted the absolute bottom, which is a no-no for shorts. And that imbalance here also displays where the 117 million is to the upside imbalance with the 54 comparison down here. So we could go up to snag out these 100x before continuing further down into these pools. And this would install the idea of a long bias, which other longs would pave the path for that journey downward. We go up to go down, and we go down to go up. That is how it operates. Bears rise before they attack, and bulls get low before they pierce you in the buttocks with their horns. So let's go to the higher time frame. With this 1 minute time frame behind us, we can expand our vision to the higher time frame. Shout out to everyone here. Booyah. Let's go into I like when it gets into this beat right as we get into the liquidity. All right, so let's go into the monthly time frame now. So the monthly time frame does suggest that there is some liquidity up here at 31.3. We got about $45 billion up here at up to the 31.5 region, and a path caked up to take it on this time frame, whereas to the equal downside, just not so much in terms of liquidity unless you make that piercing move to the 26 and below region. And so in this just immediate price action zone, if you ignore all of the minutia, it does call for a stabbing to the upside liquidity if it can muster the strength on this monthly time frame. However, if we expand our vision beyond into the external liquidity range of the 3 month, that starts to fade and become less prominent as the downside beckons to be taken at 25.4 and below, as you see these hundreds of billions of dollars just dragging the price and saying, take us higher, dad, take us higher. But it just, the tug of war imbalance starts to show that the longs are just stacking up a little bit too much for my liking on the 22.4 and 25k region, as opposed to their counterparts to the upside here, while not in necessarily short supply, $44 billion at 31.2 and 33.4. So in order to not get a bias, you have to juxtapose these time frames, and while you could go up here before you head down, we will see. Time will be the teller of all. Let's go to the 6 month time frame, shall we? And as you go to the time frame above, this starts to fade away and become less prominent as these values increase to show their heat. And this 22.8 and 22.5 region at $87 billion is just beckoning to come back and take its out, and the path to that region is paved just perfectly with double-digit liquidity numbers the entire way. So this 6-month time frame is just screaming imbalance to the downside, which is why we are just chilling in a short, which was previously negative $100 12 hours ago, is now no longer in the red. So we'll see how this holds. If we break that 236 once again, we could be backing down to the 27.8 region and below as the target for that buy side liquidity grab. So let's go into our regular fibs, not the diagonal fibs. And I managed to find a bullish trend-based fib level that we could use for our counterpart idea based off of this rise retrace on a 12-hour time frame, I believe it was. So we saw this rise retrace idea, which nearly gave back exactly that amount, and we are currently waiting for that trap door to open on the 706, and which coincides with this 236 level for the bearish projection. If we can get beneath this 236 level here, then we can possibly see coming down to this negation of the bullish trend base fib level. Okay, and then coming to the 645 or the 706 for that bearish projection, and then if we get that permission granted, we could come down to our take profit region of a higher time frame trade. So I think this is about it for what I would do for the fibs. We already determined that we were at a golden pocket region here too, so I think that's pretty good. But, wait, what? What's going on here? Huh? You guys, what's going on?
All systems operational.
I was the last of the archivers tasked to maintain and monitor the power source for the simulacrum. Everyone else had fallen into madness. Simulations within simulations, lost in infinite loops, forgetting about linear time entirely. They left me with a sense of self and the autonomy to detect and diagnose any anomalies. Little did they know the anomaly arose from the source itself. The 0-point energy. It's been at least a year I've been feeling incarnations of myself in the past. Positronic pairing was something they'd overlooked. They assumed each electron was unique. Who would have thought this entire farce to be a single particle? I must send a message to an incarnation of myself in the past. I downloaded all I could as to how we got here, from the microplastics that stopped our ability to procreate to the algorithms that captivate and control us. Perhaps this impulse can steer momentum on a better course. Whoa. Hello? Hello? Where am I? Whoa. Is this the 0-point energy field? Whoa. I don't know how I got here, but thank you. Thank you very much. Can I go back to the charts? I think I could share this knowledge. Whoa. There we go. Oh, I can see like these neon lines and whatnot. What is this? These little X's and diamonds that play out into the future beforehand? What in the world? This must be the Momentum Master. Link in the description for more. MomentumMaster.info. You go down to features and you can see it in yourself and read about it. That's pretty cool. Oh, wow. Well, as we said earlier today, we saw this we saw the hourly cross, which is now cascaded into a 4-hour cross. And this hourly cross here, back here, when we went live earlier, started to play out, and we are seeing that kind of move play out into the future from here, about 1% to the downside. Are we going to see this cloud hold on the hourly time frame? We are seeing the shift and the kiss to the cloud idea. Does that mean we will see some bullish divergence spawn? Doesn't seem like there's enough to justify the move here. We are possibly getting some bullish divergence on the money flow. We will share this one at a different time, but we'll just leave this here for now. Whoops. Let's go back on that. There we go. So the hourly time frame is trying to stay some support on the cloud here. However, if we go to higher time frames, let's start our journey from the 22 and below. We already did a thorough update on the 3-day, 5-day stuff. You can go back to the morning stream for that. So we are coming back, by the looks of it, down into this 22-hour cloud, which is turning and curving ever so slightly in this manner here. So are we going to try to come back into this cloud and test its support? We are currently getting rejected on the outskirts of it. Are we going to come all the way down to this bottom here and see if we can get bought back up or not in a bullish order block? Let's go ahead and take a look. We are overbought on the stochastic RSI, and the money flow is coming above the RSI, suggesting the fatigue of the money flow coming back down to the RSI, which is also pointing down. The one countermining that idea is the Williams opening up in a momentum to the upside continuation idea, although it could fade here on the 50 value and come back down, as it has done in the past, where it comes up to only come back down. Okay, so let's go ahead and look below into the 12-hour time frame. 12-hour time frame also overbought, and not necessarily, although it could be pinned here by the Williams pushing up. The money flow also starting to come up a little bit, and you are getting that potential cloud kiss idea. So until we break this, I'm not secure in my short idea necessarily speaking. We need to be below 29,175, or the narrative could be to the upside for that liquidity grab up here at the highs. Let's go ahead and go lower into the 6-hour, shall we? 6-hour cloud is turning, as we said earlier, and the one thing that you do is when you break out of the cloud, we did kiss the cloud abruptly here and started to make our way above. We are still seeing that there is no volume interest here necessarily, so we could make that second kiss down into this cloud before we are gone after the shift. The interesting thing is the momentum is shifting to the upside here on the 6-hour time frame, so this could suggest a continuation up before it starts to shift around. There are times where it meanders, where it shows this fatigue to the downside, where it immediately blasts in your face. The converse could also be true, where it shows this strength to the upside to only dump in your face. The charts are not always guarantees on this momentum shift, but these often lead the way to other potential moves. That's why we look at them. So let's go to the 4-hour time frame and see. 4-hour cloud also coincides with the 6 for that potential kiss. We already got it once. Are we going to get it a second time? We are getting a holding of this 706 level here, potentially speaking. If we go to the 4-hour time frame, the stochastic RSI is starting to reset. The money flow was previously overbought, which is coming lower and coming possibly down to the RSI. You are getting a double top potential here on the Williams, as well as it reached overbought status and starting to come out of that with the cross down event. The one thing to note is the cross down event. Are we going to see this suppression by the cross down, similar to what we saw with the cross up? You don't want to ignore these ideas. This is why I got into a long on this double bottom idea as well, is these leading moving average formulas of the baselines are your first sign of reversal. So it's nice to think about and heed warning at the bare minimum. So the hourly cloud, what is the hourly going to give us? That is the question of the moment. The stochastic RSI is in a good position. The Williams could be a little bit better, and the MACD could also come down a little bit more into the Williams territory. This is where you would like to see it in ideal form, with the MACD and the Williams with rising suns to the upside with that oversold status like it was on Saturday. That's where you would find those ideal positions. This is not the ideal position for me, so I will not be taking that scalp to the upside, but different strokes for different folks. Some people are more risk averse than I. This is a premium region for me, which is why I'm looking for a position to short it. As we look to the 15 minute got previously overbought. Let's remove this here and take a look. So one thing you need to note is this cloud rejection here. We got rejected on the bearish retest of the cloud, dropped out of it. The volume to the downside on the 15 minute is potentially real. And if we look at this, we're getting a potential rejection of the weighted moving average, which is stickier than the simple and more accurate than the exponential. And if we look here, we are getting overbought on the stochastic RSI. What does that mean? Well, this means this blue and purple oscillator is going up while the price action is going sideways. This is a little bit bearish in nature to show that we had a chance and nobody stepped up to the plate with the volume. So we could be seeing this inducement trap for longs to the downside. Let's just turn on a free indicator to see if that's true or not. This is the Liquidation Levels version 2 by ML application, completely free. Check it out if you like. You could set your threshold to 0.1 for every $100,000 trade. And then I like to look at it from the 15 minute and lower. And you can just see there's more 100x down here than 100x up here. This is the tug of war we talk about. So the 100x longs that are opening up here, 1.1 million, 0.24 million, 0.3 million. There's just simply off the eyeball here, just more longs than shorts. And this creates a rounded top. So these rounded top kind of scenarios are just hook, line, and sinkering the longs before they decide to just go boop and then grab them. So this is how you look for rounded top scenarios, similar to this one. So they were inducing the long liquidity of the 100x, and then they went right boop into it. And are they doing very much the same, creating this illusion of a double bottom, and then they come back into this at this exact moment in time with these 100x here? They may just come down to stop them out. At the bare minimum, it likes to come into the 100x and chill out for a moment to reassess the situation. So that's what you would look for while using this indicator. I wouldn't go any lower than the 5 minute, or it starts to blow its cache levels. By cache, I mean like memory and number of trades it can show. Although I'm open to suggestions if somebody finds a better way to use this free indicator. The Liquidity Levels by ML application. So you see here how they had just simply more longs than shorts, and so they induced some long liquidity grab, came back into it. And are they rinse and repeating that idea? It very well could be the place. And they fatigue the leverage traders to a point where they just get fatigued out, and then they go long. So it's just a game of patience versus the impatient, and the impatient leverage traders lose unless they have the proper TA and analysis backing them. So let's go ahead and take a look at that. We have the cross down event on even more micro time frame, and all of this is fractal in nature. So these things, these patterns, these holdings of the cloud and attempts to reclaim it and bounce off of it are just visible in all the time frames. So you get these outside the Keltner channel opportunities with the baseline scooping beneath it like this, and you could even just scalp these little plays. It's all about your play style. We have people in the Momentum Master Discord scalping to 10-second, myself included. It's quite fun on the NASDAQ with more volume than Bitcoin has in a single day in a 5-minute candle. So you're just dealing with that volatility and riding the momentum of those candles using the same ideas. So we're starting to see some volume step in by the looks of it. Let's take a look. Not quite yet. We saw this. We're still holding the ATR here on the 5-minute. So New York is coming to open in the next hour. So what is the kill zone idea setting up for the New York Open? Are they going to do a liquidity grab of sorts to give that idea of what they're going to do? The 15-minute crossover event, until you break those baselines, the same rules apply for that upside idea. The one thing you often see is if you do pierce this cloud that is thick, it often comes back to reassess the situation if it can't get above it. If it gets above it and it comes back in a similar fashion like this, then you would be looking for this to round out, similar to what we just pointed out on the 6 hour. So if it does come out here, then it comes back to retest it as it shifts, and then it continues from that point. What the? So we are currently overbought though, although this last leg of momentum could kick you up in a certain fashion. The interesting point to note is that we are at these interesting fib levels. This is the 706 for that bullish trend-based fib level. So if you're a bull, this is what you would be wanting to see hold, which they are attempting to hold, which they couldn't hold this 786 for that, and drop down to the next level of their trend-based support system. So the one thing we're looking for if you're bearish is this level to break here on the 236, 29,175. If it breaks that level, then you can expect, if you get that bearish retest idea out of here, and then you drop to the downside. And we talked about that kiss on the 6 hour, so that same thing we just saw on the 5 minute would apply here where this cloud is shifting. And so this wouldn't even necessarily be completely bearish all the way. You could possibly see those bounce levels too. So this is all dynamic support and resistance, and these lines have you at hello for key levels to watch, so you don't need to necessarily know the math. You can just eyeball the chart and see those baselines holding strong before the move to the upside, and holding strong potentially on a move to the downside, similar to here where it never broke those. It started to meander here and then broke down, and we saw that liquidity grab as well. All right, so I think that's a fair analysis for now. I don't think we're going to go into the stock markets today. I'm going to go to my friend's house and help him with his automated trading system. So we're going to test that out a little bit. We're dead set on funding at the moment, so apologies for cutting the stream short, but we're welcome to take any questions before we head out. Let's go ahead and take a look at, I think we did a fair analysis all the way down to the bottom of the time frames. So we're currently getting that hourly potential. What does the hourly do? So you can kind of look at that. If you have Momentum Master B, you can overlay different time frames. So you can look at the higher time frame and the lower time frame together. So on the hourly, we can see how the 4 hour interacts with it. So we're going to go zoom into that. 4 hour time frame was previously overbought, coming down on you. So the hourly time frame wants to push up here, and basically the 30-minute is in a meandering middle spot, which could be affected and pushed up by the hourly here as well. And it's about whether that 4 hour suppresses those from takeoff or not. If you get that suppression, then this comes down and this comes down too, and then this 4 hour starts to suppress. So what you're looking for the bulls is for these lines to start to curve one another, and this to start to taper out at the bare minimum and turn to the upside. All right, so we go to the 4 hour and we can juxtapose those as well. It will change the lower time frame to the hourly, so the hourly time frame becomes this one, pushing down, trying to get momentum from the higher time frame of the daily. So the 4 hour and the daily and the hourly are all meeting at a point here to see if the daily is going to give it some love or not. So that's kind of interesting to note. Is the daily time frame going to capture the 4 and the hourly? So we have the 4 hour coming up with the daily here, and the weekly time frame possibly suppression of these things. So even if you make it up with the daily and the 4 hour here, the weekly time frame is looming overhead here, similar to how we got rejected there. So the weekly time frame could suppress this daily from full takeoff. The Williams though has you, and the MACD crossover event on the daily time frame, when we look at this in detail, is in effect. So we could see a continuation to the upside. The liquidity above is, once again, we're looking for this bubble that opened up at the absolute bottom to get devoured. Where is he located? Let's go ahead and take a look. So it looks like they knocked, they're just a hop, skip, and a jump from knocking out that guy we talked about at the beginning, this 117 character at 29,344. So they might knock this guy out or even go to his friend, but this is sparser than these noodles over to here, which are stacked up nicely. So they stop out these 100x, which are the priority, and then possibly come back down into these pools below. What are we looking at for immediate guys down below if we do continue to that region? Down here you have a 181 million at 28.78, and you have another 181 million at 28.19, and a 152 million at 28.57, and these are all stacked liquidity bubbles of the imbalance to the downside. All right, so we'll get your questions, and then we'll bid you adieu. I don't want to waste a single minute of your time, so let's take a question or two. Wow, missed a lot. This is awesome. Yeah. Oh, thanks. Amazing analysis, totally comprehensive. Word, if you built it, then boys test the F out of pushing the limits into degen blood. Oh, yeah. I got my accounts, my 5 accounts good for the day. So I'm going to help my friend do that and see how to use those properly. Danny, MK1. MK1. Mark 1. USTD dominance supports downside. You always are the one to bring up this USTD dominance. I keep forgetting about incorporating that. Let's look at that and then call it a day then, shall we? The daily cloud also waning here is kind of interesting to note. Means the volume is not necessarily stepping up to the plate on this one. You're getting a thinning cloud on the daily time frame volume here. So this surge up and reclamation of the cloud could just be a stop hunt before they break it. They did a similar fashion here. They broke above it, and then they came down as it started to curve out on the top level here, and then we came down. So as it starts to curve out here on the cloud on the daily, you want to watch out. It did that before, just before a huge dump. So just something to note. You can go back and back test this. It starts to curve out on the daily cloud, and boom. So curves out on the cloud, and boom. Whoa, what? Back. Yeah, I think that was it. So you had the curve out of the cloud, bearish retest, boom! So yeah, it's just something that we've noticed as we've incorporated all these components, that thinning of the cloud, it just becomes a thing. So you go to trend cloud weighted formula, expanding and contracting with the amount of volume present. The key being it's volume based, so it gives you a visual cue as to how the volume is doing. So when the volume is not doing so hot, it will show you with that thinning Heikin Ashi formula, and that will give you how the volume is doing in real time on that time frame too, so you can see the bullish and the bearish scalping natures of everything. So here's where we saw that shift out of it. And this is also starting to curve a little bit too if you look at it carefully. So this curvature could insinuate a stalling nature and that cross down event. So it's all about what that hourly can give us now. What is the hourly going to do? Is it going to burst us to the upside or fade out here? You got one hit here, one hit to the high, second hit to the high. Power of threes, are you going to get one more hit to the high, and then what do you do there? What happens on the third hit? Do we break through? Do we get rejected? That is the question. Let's go to the USDT dominance, as my man CNC pointed out. This is something we had put out here for a while here now. We had this rocket ship that played out, I believe. Wait, when was that put? Wednesday? Yeah, did I put... I swear I put this like before Wednesday occurred, so that's weird. Sometimes it just does the same, it hits the exact point I had it, and I didn't do this after the fact, so I don't remember when I went over it last time, but it was back here, so it must have been like over the weekend or something. The last time I went over this and I said we would come back to the 618 and bounce off it, and then wow, that's crazy, we did it on the exact day, on the exact time. Weird. So yeah, we're getting that bounce off the 618 as people got kicked into USDT from losing both sides of the trade here. So if longs get wrecked down to the 25k region, that would be a potential hit up to this region here, which would continue the idea that we had from that rocket ship back there last Friday, which would continue to that region, knocking people into USDT. So I think the analysis stands pretty strong from that time we gave it back here, and this balance is also included in that. So we don't need to really change a thing. We're still good in the hood with the USTD dominance analysis from who knows when, a week ago. Weird. I don't know why that is, but okay. Alright, well, it looks like we're getting a bounce here on the 15-minute and the hourly now. So the 15-minute and the hourly is stepping up to the plate. Is there volume behind it? Looks like we're getting a PVSRA move here in the stop, hunt, rise, continuation idea. Let's see what is going on here. So we do have those longs in imbalance for that 100x. Are we going to stop out some of this $1 million guy, as well as did they hit that guy that we were talking about at the beginning here? They did, and some longs opened up as well. So we can look here, this guy got knocked out and they opened up some longs. Considering the shorts, there's a 40 million imbalance in short in long liquidity, short liquidity on this opening up right here. So this induced some longs to go long at that high point just now at that breakout. And if we see this rejection at the cloud, as we insinuated just a moment ago about the thickness of it, it just induced some longs, which the longs could now become that dead weight, and that inducement point could bring them down into this region as we suggested. So if you're in a short and there's these thicker long bubbles, that you want to see that. You want to see the shorts get knocked out as more longs open, and then that gives you the idea of the imbalance to that downside idea, as we see here. So it's all about that rejection to the cloud here. I don't think we're going to stay for 11 minutes to see if that occurs, but it looks like it's occurring as we speak. So if it comes back into this is how we incorporate these liquidity and momentum concepts together. Momentum needs volume to occur, so you need to know where the volume is and where the dead volume is sitting in the charts for it to be gobbled up and slurped up by the market maker.
Fatality.
Yes, and always pay yourself, because there are no guarantees in life and there are no guarantees in trading. So if you see that rejection to the cloud and come down here and you were one of those long folks, that's why you lock in your gains as you go. I was up $200 just to be transparent. I was in the long from back here, and it dropped, or sorry, short from back here. I was up like $260, and then it came back, and I'm still in that trade. But yeah, I was up $260. Should have locked it in before on my lunch break yesterday. So let's bid you guys adieu. If you have nothing else better to ask me, let's see, it's not weird at all for someone who has known you as long as me. Alright. Yeah, he has some weird stories, I'm sure. He could tell you in another time. Well, alright guys, well, I'm going to bid you adieu here. Once again, you're looking for that rejection and gobble to the downside for me personally, based off the liquidity, based off of analysis. However, it's what the hourly can give you here and whether it can maintain these levels. The levels I'm looking to break are 29,175. If it breaks that, then I can rest a little bit easier in my short as it starts to come down into these pools. Alright, that's my story, and I'm sticking to it, and I will bid you adieu. So thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. We'll bring the fire, we'll bring the accuracy, and we'll bring the precision, so you don't need to waste another minute of your day. So let's do that and catch you guys on the flip side, and enjoy your weekends. It's Friday, so peace.